Morning, guys. It's Dale with the insurance. Thanks for stopping by. Today we're going to talk about an article that's important because it covers probably the most valuable item in most people's possession, right? And it's how to compare homeowners insurance policies, right? So nowadays, obtaining homeowners insurance is quite easy, right? It's become just as automated as auto insurance. Auto insurance is definitely important, but typically a person's home is probably a bit more valuable than their auto on average, right? So homeowners insurance is incredibly important, right? So here kind of are a few pointers when comparing and trying to find the right homeowners insurance. First and foremost, you want to be prepared, right? And be prepared is essentially equating to understanding what coverages you may need and the value of what you're trying to insure, right? So coverages will include kind of, are you in a flood zone? Do you need quake insurance? This is in addition to kind of the property and business personal property and liability insurance that's embedded in the homeowner's policy. And then you want to have an idea of the value of your home, the value of the property within your home, right? So if you have any jewelry or fine arts, if you have storage either within your home or nearby, you want to have all of that material and information at arm's reach while you're doing this process. Second, you want to get familiar with kind of the insurance jargon, right? A few items that are of outsized importance are kind of your ACV versus replacement cost, right? Actual cash value, as most people know, includes depreciation, right? So if you suffer a loss, sure, it's covered, but you may not get an item that's up to date, right? Because the item that it's replaced with includes the depreciation that has accumulated over the years to that item. Replacement cost is replacing an item with, basically in today's dollars, right? So an item that's brand new, same purpose, and ends up replacing your item without including depreciation. It's typically a bit more expensive, but it obviously makes you completely whole if you suffer a loss. 3, deductibles. This has to do with a person's kind of financial situation, which is personal and different for everyone. What we will say is be prudent with an understanding of how much you can absorb in terms of out-of-pocket costs, right? And be careful about trading price or a lower premium for a higher deductible, right? That's all. 4, this is a coverage that's often excluded and then reintroduced into the policy through endorsement, and that's water backup. And it's important because a lot of people have finished basements, right? Finished basements is just like another floor of the home. So it carries a lot of value. A lot of people have storage down in their basement where water gets backed up. So it can that can all be damaged. So you really need to pay attention to the policy to make sure that's included, and not just included, but included at adequate limits, right? 5, kind of discounts. Make sure, because each carrier has different discounts and you may not even know what you qualify for. So make sure before you sign on that dotted line that you have broached this topic with the carrier to make sure that before you're already agreeing to a premium, you've exploited and used every discount that's available to you. 6 is kind of shop and compare, right? And this goes for just about any product or service. homeowners insurance is no different. You want to build a market, right? So you want to go out and consult at least three, but I mean a handful of carriers, right? Notice the different coverages, right? Notice the pricing, and by building this market, it gives you a better chance at ensuring that you're going to choose the carrier with kind of the best value. It may not be the lowest rate, but you want to make sure that you're properly covered in the end. That's what's paramount. And the last thing is research, right? Research. This is probably easier with the national carriers, right? With the big commercials, big brand names. Although you still need to do your research for those guys. But with the regional carriers that are a bit smaller, you need to be really prudent and careful about their financial stability, right? Because you want to make sure that if you were to have a claim, that the company is solvent and able to pay that claim when you need them to. The second thing is their track record, right? Look at their reviews, right? Are they receptive to claims? Do they respond within a good amount of time? Do they pay those claims? So get a feel for the carrier's track record, their financial stability, and that'll give you kind of a fulsome picture of your partner, a partner that is you're looking to insure quite possibly the largest asset in your possession, or most valuable, should we say. Thanks for stopping by, guys. Hopefully this was helpful, and we'll see you next week. Thank you.